I mean, that roll call that Robin just rounded up for us there, it's a cauldron. It's a cauldron of risk. But let's deal with China first of all. They're not a currency manipulator. I just wonder what this does to the PBOC. You're not a currency manipulator, and you've been doing everything in your power to keep the yuan, under wraps. Does this put more pressure on them to keep the yuan, as it were, at these kind of levels?
Well, I'm not sure the specific announcement changes things. For domestic reasons, of course, they've been trying to stem the weakness of its currency. And, I think perhaps the more interesting dynamic in terms of what they're trying to do is, of course, the Trump comments in regard to the US dollar and the potential that Yellen could actually get another term at the Fed. And for me, that's hugely important for the dollar, in particular the Yellen risks rising. So in that sense, it makes the job for China that bit easier. And clearly what they're trying to do is keep $CNY roughly stable at around 690. And developments from overnight certainly helps that. In terms of the currency manipulator story, I don't think it changes much. Sorry.
Let me put the same question to you that I put to Robin. I mean, we see dollar weakness because traders are less concerned about rising rates. The President of the United States has said he likes a low-rate environment. But does his opinion on the rate environment really change how the Fed operates?
No, I don't think so. And, I think if you take the Fed's dot profile, I think it is ultra cautious. And in that sense, I would argue that Trump and his comments and the behavior of the Federal Reserve, they're basically on the same page. And I think that's why the markets have interpreted this as potentially Trump considering offering Yellen another term at the Fed. So I think it's all pretty consistent with essentially what's priced in the markets at the moment. The market is priced to some degree towards where the dots are, certainly for this year. And there's no reason to believe that even with better data, that the Fed would up the ante and try and speed up the degree of or the pace of rate hikes.
How important is it? You mentioned Yellen there, and I was amazed that he mentioned himself that he may indeed reconsider or consider Yellen for another term. How important is that?
I think it's hugely important. And, certainly in the run-up to the elections last year, there was an awful lot about how dramatic the Fed and the Board of Governors was going to change. And of course, there are still going to be a lot of changes in terms of new personnel. But ultimately, as we all know, it's the chair that really holds the power. And especially if, after all of what was expected in regard to what Trump would do, if he then turns around and offers her another term, and of course she accepts, it certainly really cements her power. And that, to me, is an indication that we get this continued ultra-cautious move towards the neutral level of Fed funds.
Manus was showing, Derek, a fascinating chart yesterday showing the break-evens kind of rolling over a little bit. So inflation expectations getting a little bit softer in the U.S. Is it possible that the Fed does get a little bit more dovish than the stance that we expect from them this year?
It's possible. I certainly think, obviously, given what's happened over the last couple of weeks and definitely this intensification of geopolitical risks and increased risk aversion, it does raise the prospect. I think also the dollar has been underperforming, and this isn't getting much attention in terms of this increased geopolitical situation. But the data is somewhat more mixed than it was certainly into the run-in of last year. And of course, the Atlanta Fed GDP Now index has dropped to a new low of just 0.6%. Now, of course, the Q1 data, there's reason to be a little bit skeptical, but beyond that even, some of the sentiment indicators look like they're about to start turning after the Trump-related bounce. And the hard data is certainly more mixed than it was. So I think, it's a good question, but the Fed are being ultra-cautious, so I still think there's scope for two modest rate increases through the remainder of this year.